This is the Business Lens, where we go beyond the headlines and make sense of the numbers shaping your money, your business, and Nigeria's economy. Good morning. My name is Divine Alex. Stay with me. Let's connect the headlines to your business, your money, and Nigeria's economy. Now, let's begin with a story that got many exporters talking over the weekend. The United States has imposed a 12.5% tariff on imports from Nigeria under a new trade policy targeting countries it says have not done enough to stop goods produced with forced labor. I'm sure this sounds worrying, right? Well, here's the twist. According to the Center for the Promotion of Private Enterprises, CPPE, Nigeria may not feel a major economic shock because crude oil, liquefied natural gas, and other petroleum products, which make up over 80% of Nigeria's exports to the U.S., are exempt. So while some non-oil exporters could feel the pressure, the country's biggest export earners remain untouched. The bigger question now is, when will Nigeria's non-oil exports become strong enough that stories like this really matter? That is the question. Now, let's head to the next one. And this time around, we'll come back home. Despite borrowing costs remaining high, Nigerian businesses aren't slowing down. Fresh CBN data shows private sector credits climbed from 81 trillion naira in May to 83.3 trillion naira in June. At the same time, lending to government dipped slightly to about 40 trillion naira. In simple terms, businesses are still taking loans to expand, invest, or simply keep operating. The challenge now is making sure those loans produce more goods and services and not just more inflation. That is it. Now, here's another interesting contradiction. Now, even with the CBN keeping interest rates at 26.5%, the amount of money circulating in the economy actually grew. Nigeria's broad money supply increased by more than 4 trillion naira, rising from 129.21 trillion naira in May to 133.25 trillion naira in June. So while monetary policy remains tight, liquidity is still expanding. Now, the big question is, will all this money drive more investment and businesses and business activities, or simply push prices higher? Which of them? Now, if you've been trying to keep up with Nigeria's tax reforms, I have something new for you. Here's another update. The Finance Minister, Taiwo Oyedele, has inaugurated a committee to develop a brand new VAT, which is VAT modification order, that will support the implementation of Nigeria's Tax Reform Act. According to the minister, he said the goal isn't to revive the old VAT system, but to create a simpler, more competitive framework that supports businesses while protecting vulnerable Nigerians. So yes, Nigeria's tax story is still evolving. Now, let's step away from that one and head to the next one. Now, it looks like Dangote's ambitions are getting even bigger. The Dangote Group has proposed building a petroleum product storage terminal in Cameroon as part of plans to strengthen distribution from its 650,000 barrel per day Lekki refinery. Now, if approved, the project could improve fuel supply in Central Africa while creating another export destination for refined products made right here in Nigeria. Now, it may still be at the discussion stage, but it shows just how regional Dangote's vision has become. Now, away from that and still on Dangote's issue. Now, Dangote, investors are clearly buying into that vision. The Dangote Petroleum Refinery has secured another $2.5 billion. Let me say it again, $2.5 billion in fresh investment in what the company describes as Africa's largest publicly disclosed primary equity private placement. Now, the funds will support expansion, strengthen the refinery's finances, and give it more flexibility for future growth. Now, beyond the money, it's another strong vote of confidence in one of Africa's biggest industrial projects. I think we should give Dangote his flowers, really, because this is huge, really massive. Now, inflation may be easing, but manufacturers say life is still far from easy. Now, the Manufacturers Association of Nigeria says that although headline inflation slowed slightly to 15.91% in June, businesses continue to battle rising food prices, expensive energy transport costs, and exchange rate pressures. Now, their message is simple. Bringing inflation down is good, but lowering the cost of doing business is what will truly help Nigeria's factories grow and compete, which is what everybody is preaching. Now, let's step away from that and head straight into the markets. Finally, let's check the markets because it was another winning week on the Nigerian exchange as investors added an impressive 2.53 trillion naira to market value. Total market capitalization climbed to 159.59 trillion naira, while the all share index gained 1.6%, and the market year-to-date return improved to 58.96%. Now we have banking stocks, consumer goods companies, and new listings that helped power the rally, proving that despite profit taking on Friday, investor confidence remains firmly in the green. Now, these are today's business headlines. From trade and taxation to credit, manufacturing and the stock market, one thing is clear. The Nigerian economy is still evolving, and every new policy or investment creates fresh opportunities and fresh questions. Yet, Dangote attracts $2.5 billion in fresh investment for his refinery. Now, let's unpack what this means after the break. My name is Divine Alex. Please stay with us. You are welcome back. This is the Business Lens of Rapid Television. My name is Divine Alex. Now, Dangote Petroleum Refinery has just secured another $2.5 billion in fresh investment, one of the largest private equity deals ever disclosed in Africa. At the same time, the company is looking beyond Nigeria with plans for a petroleum storage terminal in Cameroon, expanding the reach of its 650,000 barrel per day refinery. Yet back home, we have manufacturers still complain about high production costs. Businesses face expensive borrowing and structural challenges remain. So what exactly are investors saying that many Nigerians aren't? Is this a vote of confidence in Dangote alone, or does it signal growing confidence in Nigeria's economy? That's our conversation today. And joining me in studio is a global business analyst, Daniel Effa. Good morning, Daniel.
Good morning, Divine.
It's great to have you back in studio. You know,
yes,
you took 1 week away, you know, doing your vacation.
Exactly.
How was the vacation?
It is what it is.
Okay, it's good to have you back. Now, the Dangote conversation, you know, I feel like $2.5 billion is huge, a lot of money, and a lot of people are already, you know, dropping their back-to-back comments as regards to that. Before I even start throwing the hot questions, I want to get your thought. When you saw that particular headline, what was the first thing that crossed your mind?
I think I'm not surprised because I think I've also echoed this on the show a couple of times that a refinery of that magnitude is not a Nigerian business. It is a global business because the oil sector is a very limited space and it's a very closed space. So any infrastructure, any structure like that would always attract quality funds. And also then I remember when this old issue with local marketers were just going back and forth, the old different court cases, different issues. I also said it then that there is no reason why a Dangote refinery of that size should be so bent on the Nigerian market, should be so obsessed about the Nigerian market, because whatever you're selling can be sold across Africa, can be an African market, right? You can basically have enough enough demand from the African market than being obsessed about the Nigerian market. In fact, it should be Nigeria saying, Dangote, we need to have a deal with you because we are giving you space to operate. We need to have a deal with you that guarantees supply of your product. That should have been the conversation. So that was why I was like, yeah. So now, for the past maybe 6 weeks, for example, we've seen different conversations now with the Cameroon
conversation
depot. We've seen him now being a major supplier in the Togo shore terminals. We've seen him talk about East African refineries they want to set up with Rwanda and Kenya trying to set up one. So that is the kind of business that was done at that Lekki free trade zone. So more of things like this will happen because now he's saying, I want to go public, right? But then I can also secure some certain private equity deals before I go public. It is a big business. It is a business that actually has disrupted even the entire oil sector globally. So it can only get better for Dangote refinery from then on. However, would that 2.5 billion in private equity reflect in our foreign reserve conversation? That's another thing entirely,
conversation.
because we don't know what the plan is, because I would not be surprised if the Dangote refinery says it wants to be quoted not just on this Nigerian Stock Exchange, it wants to also be quoted maybe on the New York Stock Exchange or even the London Stock Exchange. So those are the conversations. But for the fact that it is putting a torchlight on the Nigerian economy, it is where we are getting excited about, because what happens with fund movement like that is that there's something in economics about demand, about complementary demand, or so whenever there is a demand for a product, some product around it will also benefit. So if people are buying cars, for example, people that sell tires, people that sell car accessories, we also get and that is exactly what will likely happen. That with private equity towards the Dangote refinery, we might also be seeing the similar demand for other parts of the oil sector. You get whether it is downstream, the midstream, or even the upstream sector. We might also even see other petrochemical conversations also coming on. But remember that we also have other refineries also in Nigeria that might also get to see conversations growing in terms of investments in all those spaces. So it is a good one in terms of the overall effect, and also for the business. Itself.
Now, when private equity investors, commit billions of dollars to this large extent, what do you think that they are actually evaluating? What are they evaluating?
A lot of times it's usually the confidence of the CEO, the direction, the vision behind the brand, right? So he has done something that is termed impossible, right? If there was going to be a bet about where would a 650,000 barrels a day refinery be sited in Africa, maybe 10 years ago, with the kind of bottlenecks in Nigerian system, you most likely say it's going to be South Africa, Morocco, or even Kenya, right? But then Nigeria has pulled it off, right? So and we were able to, at least, even though we had a lot of back and forth, NNPC wanting to invest 22%, now later did about 7%. In fact, it's even say he wants to give them back their 7%. You can one way or the other, we still made it happen, because if Nigerian government had not supported, no matter how it is, it would have still been a difficulty, because we remember then that during the last CBN governor, Governor Emefiele, we had a deal with Dangote that ensured that Dangote got dollars at official rate, and at that time. The black market was almost double of whatever the official rate was. So and the business is also cited in the free trade zone. So we still, to some extent, as a country, played our part in this conversation. So as a businessman is saying, I'm not stopping at 650. I even want to expand this 650 to almost 1 million. I'm still looking at setting up shops in different places. I still want to help other countries to even set up something similar. It automatically gives investors an idea that I think it is best to plug in while this business is doing this now. And I think it would even get more, right? It's better to plug in now. This business might expand and would definitely give us a return on our investment.
Yeah, okay. Dangote got a lot of money that he's now thinking of how to refund
exactly.
some. Now, this is Dangote's first major equity fundraising involving external investors beyond its traditional stakeholder base. Now, does this tell us that maybe global investors now have greater confidence in Nigeria's downstream oil sector? Are they simply just betting on Dangote's execution?
For now, it is just Dangote because, yes, can it translate into industry-wide conversations? It can, right? But then it has to also be some other deliberate infrastructures, right? So, for example, and might not necessarily be crude, it might be oil, and might be gas, right? But for example, if Africa and the countries involved are able to pull off the Nigeria-Morocco gas pipeline, for example, you might deliberately see IOCs now saying, let's come into the oil and gas space and to basically get more gas, basically help you guys get more gas. we can do more. So it's usually a function of infrastructure. We will not have that kind of access to funds, or it would not have that kind of access to funds if there was no refinery yet in place, and him still saying, I'm not done yet, I'm not done with this, I still want to go for more. So it is a function. That's why I said it's that Dangote himself has increased his brand strength, his goodwill across the globe based on being able to pull this
amount of money.
Yeah.
Now, if it were in Dangote, do you think that we'll still have investors commit this amount of money?
If the business, it's the structure, the setup, if the business itself is something that is contributing largely to Africans' less dependency on petroleum products, right? Yes, it should, because at the time, right, where we are right now globally, whenever we have declining interest rate across the globe, right, you see investors wanting to go to emerging markets where the interest rates are higher, right? So for businesses naturally you get normally all over the world, everybody's looking towards Africa. You get some part of Asia, some parts of South America, to see, okay, where can we invest? You get it, that will give us higher returns, that will guarantee some level of returns over the next 10, 15, 20 years. And even though we are beginning to see, we get to a point of decline, you get in the use of petroleum product or crude oil as it is. Africa is just starting, right? Because before we get to a point whereby we have 100% or even 50% compliance, you get for Africa, for example, on even just electric cars, it will take another maybe 25 years. So for them, they're already saying, okay, the demand is there. Africa might likely say, we don't want to import petroleum product again from Europe or Asia, but the focus can we start, can Africa become dependent, get on its own on its own supply, then at that point the investment will
Are we watching the emergence of a Nigerian company that is building a regional energy network across Africa?
Yeah.
How?
We are seeing a company that on a Nigerian level might be doing whatever Tesla is doing in the US, and that is where we are already. Of course, I've started seeing people saying, is it a concentration risk? But then it takes an entrepreneur to say, I must get it right.
I must get it
was
right.
about 3 or 4 entrepreneurs that really built whatever America has today. So we need more of Dangotes that also be daring enough to say, whatever the circumstances is or are, we will still
get to
ahead and achieve.
Now, how significant is this for Nigeria's ambition to become Africa's refinery and energy hub?
We are already there. As long as there's no refinery that competes at the moment, and if there's going to be another refinery that competes, he's already positioning himself to also be the one to set it up. So automatically, if you have a refinery in Africa that can refine 1.5 million to 2 million barrels a day, I think that is enough in terms of Africa's demand you get for petroleum product on a daily basis. So we are almost getting to that point already, and I think that is why even the private equity and so many other investors globally are positioning themselves to be a part of.
Okay, so this is where I really think this is a little bit interesting. Now we have Dangote that is attracting billions of dollars, but we have the Manufacturers Association of Nigeria talking about the fact that businesses are still battling energy costs, logistics, exchange rate pressures, and expensive financing. How do we explain just these two realities that is existing at the same time?
Okay, so two factors. Okay, so Manufacturers Association of Nigeria are the ones that are actually in the real sector, right? Because remember, when there's some certain industries you are in that automatically you are insulated from some certain pressures. Energy, food are usually essentials, right? No matter what happens in the economy, people will still have to commute. People will still have to use their diesel generators. So a refinery producing crude oil products and doesn't necessarily sell to just Nigeria is insulated from some certain pressures. Manufacturers in Nigeria are manufacturers that produce goods that Nigerians consume, right? So they would naturally directly, right, be affected by whatever is happening locally, and that is why the interest rate conversations is affecting them That is why infrastructure deficit is affecting them. That's why insecurity is affecting them.
As well.
So you cannot, for example, Dangote refinery, for example, when it was setting up, basically built up a solar factory for electricity. Doesn't depend on whatever the national grid produces, right? So it's for so many manufacturers are whether small scale or large scale, still have some level of dependence on the grid, right? So those issues, and so when what man is basically saying is that inflation as it stands, right, is basically a supply chain issue, not necessarily a demand approach, right? Yes, CBN is doing its own thing with the old reforms, with the different interest rate tightening policies and here and there, which in its ideal sense is effective, because that is the textbook approach to do that, particularly when it comes to controlling money supply and all, right? But then the man is saying no, that is not just the issue. That is one part of the issues. That if we do not tackle the structural part of the issue, which is where logistic comes in, infrastructure, road networks, and electricity and security, right? Because we are not as connected in terms of infrastructure as we should, right? Yes, myself, we are doing well with trying to build up trains and all, but then we still need our primary road networks to be very good, because if they are good, what happens is that a manufacturer can basically not necessarily have a factory close to his raw material, but because he or she believes that this raw material can get to him or her, you get in about 5 or 6 hours, right? They can actually set up factories in locations and be able to access to their raw material with ease. But if you travel Nigerian roads right now, right, from Abuja, for example, to Lagos, you'll most likely see about 200 to 500 trucks that are broken down right, on the road. It is a usual conversation. It's even better Lagos to Abuja. If you do the same thing to the east, right, you will see even worse conversations, right? So if you even do from Abuja, now I've seen some recent road constructions and area, but if you still do from Abuja, for example, to the north west, it's even worse, right? So those are the issues, and you need to solve those issues. Those issues cannot be solved with interest rate increase. No matter if you like tighten the economy till it is stifled, nothing will happen, because these are conversations that has to be done. And if you can fix those issues, you realize that you really don't even need to tighten a lot, because businesses would boom. People will get employment. When employment will happen, you get then it will now trickle down into more taxes, and you can now say yes, you have more money to play around. So it is usually so what man is saying is we need to fix the structural issues, right? Fix the structural issues, and would be happy doing business again in Nigeria, which makes it easier, unlike a Dangote that is not necessarily focused on Nigerian focus per se in terms of itself.
Okay, so now the question is, if someone has let's say the 2.5 billion naira today, and they want to invest in Nigeria, and then we're looking at these two stories. Oh, Dangote is doing amazingly well, and then man is also on the other hand complaining about the fact that we still need to do some structural reforms to make sure that it helps other manufacturers. Do you think that these people will be able to pull in this money into Nigeria to help the manufacturing sector boom?
Nobody will do that. An investor would not. He's not willing to throw his money or our money away. So what they will do instead is what they're already doing. They'll push it into the market. They'll push it into stock market. Push it into buying treasury bills. Push it into buying bonds, because one of the things that the former vice president did was created a council, presidential business enabling council, one PEBEC, right? The real idea of PEBEC was to evaluate what government is doing around ease of doing business, to ensure that an average business can set up in Nigeria, right, from point of registration down to infrastructure, right, to know how easy would it be for a business to run in Nigeria. Right? So we've not gone back to that. I've never heard a lot about the council anymore. But so then it now leaves the responsibility to the Ministry of Trade, right? So how often does the Ministry of Trade do an evaluation of businesses that, okay, what exactly are the issues you are facing? Because I cannot, except the business is an online business, and that's why you see that our services sector is usually the sector carrying the Nigerian economy, because Nobody wants to really. Everybody's make as in bring to the best minimum to expose themselves to risk, right? Countries like Vietnam, countries like Bangladesh, and all these Southeast Asian countries, what they have going for them is the fact that there's infrastructure. There is also they are similar to us in terms of manpower. They have a lot of population is quite high. Taiwan, right? So, but what they've done is that there's infrastructure, right? So what infrastructure does is that it backs business. It's easier if a business is coming to set up in Nigeria and knows that there's electricity 24/7. Access to electricity is there. There's road network connecting everywhere.
And
It is
there's
easier,
security
exactly.
as well.
So it is easier to say, okay, I'm bringing $2.5 billion and I'm setting up 3, 4, 5 factories. The reason why I think I heard was it the vice president talking about the fact that we talk to African countries to start ensuring that we don't just send agricultural produce out of Africa. We need to start adding value to them so that we can make more from agricultural produce. The reason why we can't do that is because of infrastructure, right? In fact, it is easier to set up such a business in Ghana or Cote d'Ivoire, right? Or even Kenya or Rwanda or even Uganda. I think I saw a report like that Rwanda is easy. Like people set up businesses in minutes. You have your business set up, right? It's easier to have it there than even Nigeria, and that is the big issue that is really preventing us. We barely crossed a million. We even achieved $1 billion in FDIs last year, right? So it shows that conversation is a real conversation that really should be addressed. Yes, we are excited about the reforms. They are resetting the economy, but reforms is just a correction. Yeah, someone is sick, you're giving the person first aid.
Yes, okay.
What's next is actual treatment. And that is where the restructure is, because if these old reforms ends, right, without structure following it, it will just
be
back
like a
to
first
where
aid.
we were.
Exactly. So now when someone who has like $2.5 billion to invest and the person doesn't really want to go into oil, and you mentioned some, which sectors do you think has the greatest potential over the next 10 years for this person to actually throw in their money into that particular investment?
It all still boils down to infrastructure. I think there is the way the Nigerian economy is structured is in such a way that there is potential for every sector, whether it is financial services, whether it is trade, whether it is agriculture. Agriculture, for example, agriculture alone is doing over 60% of Nigerians' workforce in terms of employment. But when you look at the numbers, you would think it is fantastic. But then when you look at the quality of employment that the quality of employment in terms of how much is being earned, right, by people in that sector, you realize that it is almost minimal. In fact, financial services trumps that number by a mile. So the conversation then is, how do we add value to a lot of things that we produce, right? How would you add value to a lot of because agriculture alone, for example, if it is properly invested in terms of infrastructure, you will see a lot of more business. Nigeria has enough arable land. We've not even touched up 10% of our arable lands, right, to farm. Right? So Nigeria alone can feed West Africa without stress. In terms of there's no product that any country in Africa, or at least in West Africa, has as an edge over us. Because how is Ghana highest producer of yam in the world? How? In Africa, yes. Followed by after Jamaica. We should be able to have, if we push properly, cassava and yam should be our mainstay. We have palm oil, we have rubber, we have
a lot of commodities that we can actually push.
We should even do more cocoa than Ghana based on the size, availability of the kind of lands we have, right? So if we don't push those conversations, right, we can't attract. Nobody's going to give you money for free, except they bring it to your market and expect that you give them higher interest in it. But then if you're really going to do the actual work, you need to expand. You get that sector, and that is what I'm always of that school of thought that our economic development plan for the next at least for 30-40 years, just like the way China did, should be a legal document. Should be a legal document that every president comes and is able to do his own part. So it should not be everybody comes in and give campaign promises. We all know what the problems are. Everybody, basically, if you have a campaign tomorrow, every candidate will most likely say the same thing, from constitutional reforms, from structural, from federal character reforms to agricultural issues, infrastructure. Everybody will practically mention the same problems that is available. So why can't you just have this as a legal document that everybody comes in and you are following it on a step-by-step basis? Because if you do not have that kind of plan, it will keep going back and forth. This
Circling
cycle,
around
yeah.
the conversation. Now, I want us to do something like a realistic check.
Yeah.
When we look at what is happening in Nigeria with the Dangote and some other parts that are also doing well, do you think that 10 years from now, that when people look back at Nigeria's industrial story, what do you think that they will be saying? What do you think that the Dangote refinery will be remembered as?
Remember, are we saying?
Yes, because a lot of people right now, because me, I was following the conversation, are saying, "Oh, we need more Dangote." You even said we need more
Yeah,
Dangotes.
true.
Now, do you think that we have the capacity and the workforce and the people who could actually step up to push, maybe Miro Dangote at some point, and then we can say, "Oh, this is now a step further to us expanding our industrial zone."
I think that if we're going to be catching up, there's a lot of things we have not caught up on, because we shouldn't be having Dangote shouldn't be having a refinery in 2025, 2024. This thing should have been a concern for the last 20 years at least, and that's what he said. He said, "I've wanted to actually acquire a refinery 25 years ago, thereabout," and he was frustrated not to have those refineries. So in that condition, we are ideally actually, to some extent, quite late, right? So the only thing that we can catch up on the next 10 years, that I can say, yes, if we deliberately push now, that we might also be a major conversation in, it's probably AI, probably technology, probably AI, because one of the reasons why I admire a country like India is not because they are getting it right. No, India has almost similar issues. They have a very strong diversity. They have security issues. They have overpopulation. Right, there are a lot of issues. But when you look at certain sectors on the India economy, you realize that India, the government is positioning its businesses properly to the global competitors, and that is one of the things that we need to do, not just for Dangote, and we need to do it for major sectors of the economy. So because yes, we are doing it for the banking sector, financial services sector, but then other aspects of the economy also need something like that. That the government can say, what this guy, for example, man is complaining, for example.
Yes.
Well, you should take over conversation around, man, okay, what exactly do you need? If this is exactly what you need, why not let us fix this for the next 18 months? Let's fix whatever your issues are. If it is the road network, let's fix it. If it is electricity, let's give you guys,
even if it's one at a time.
Exactly, cluster. Let's put you guys at the cluster and you have access to electricity, or we create a solar farm. You guys can just, all those conversations can, if they can come in, what it does is that it positions those sectors properly, because a sector that is well drilled, that is well vast, that has proper structure, that has proper infrastructure, would most likely expand. And when they expand, they will most likely employ more people. Because the reason why we don't even have data around how many jobs are being obtained monthly in Nigeria is because what are we doing particularly to even get these jobs? What are we even doing in terms of structure, in terms of sector conversations that will say, okay, yes, we gained 100,000 jobs last month. So this is only when you are deliberate about ensuring businesses are doing what they're meant to do. That is when you can now start computing such data. That is where we really need to do for the next 10 years.
So now, before we go, should we say that, or has Nigeria become attractive to investors, or have Nigerian entrepreneurs become exceptionally good at succeeding despite Nigeria?
I think I'll take the second option.
Okay, why?
Yes, you can. There's really, some people definitely argue that Dangote, for example, has enjoyed Nigeria government patronage. That's why he has gone this fast, right? But at the same time, I think that it also took him to be a bit extra audacious for him to have done what he has done so far. Anybody that you've seen that really pushed numbers, right, in recent times has been the fact that despite the challenges, they've just still pushed through. So we would have loved a scenario whereby the government is pushing actively for the bigger businesses to really keep doing numbers, because they are the ones that will actually employ the large labor regard for that would keep reducing our unemployment rate, right? So government needs to do more, right? Yes, Nigerian spirit is any idea will get it done, right? But then we also need government to be more involved. It is easier when government is more involved. There is hardly a global economy right now that is not. There was a trade war when Donald Trump was his first time as president. It was between the US and the EU over Boeing and Airbus, right? It was a big issue. Same thing with wine and EU and the UK over wine. So everybody pushes their brand. Everybody pushes the brand they represent. And that is what we should also do. There's nothing absolutely wrong. There's nothing wrong with a government pushing a certain brand. With China is doing the same thing with a lot, so many. In fact, China will pick up a sector and call for businesses and now start pushing these businesses globally. So in fact, give them enough subsidies so they can expand faster. That's why you see, for example, EV, for example, China is leading in EVs because the government deliberately gave subsidies to manufacturers, to car manufacturers to keep building. And that, in fact, now they literally have a car glut because supply is too much, right, than even the demand right now. So that is the way it works. A government, that is why mixed economy is usually what most countries have, because no matter how you say it's capitalist, with the government supporting, pushing sectors, it turns that economy into a mixed approach, because so it's usually a function of percentage of mixed. Is it 50% mixed, or is it 30-70, or is it 20-80? It depends on the mix, but no economy will survive without proper government deliberate action in growing or building certain sectors to help the economy grow even faster.
Okay, because you already mentioned US, I want to take your last comment. What was your own interpretation of the fact that US had imposed a 12.5% on Nigeria?
I think it's not just Nigeria. So there are a lot of other African
countries. Yes, but we have to talk about Nigeria. Nigeria is ours. And then it went toward the issue of forced labor.
And so I think that what we need to do, and I think one of the things that we've not been doing in recent times, I think that's from the Buhari administration up until now, is our very, very, very silent diplomacy. We are now so what's the word? We are now so cold when it comes to diplomacy, whether it's across Africa or even across the globe. We are now looking more beggarly, right, than we were some 25-30 years ago, right? So I'm certain that if it was this last 10 years, we would not have gotten Paris debt forgiven, because our clout has suddenly just get dissipated over time. We were a very big force, but not even in terms of economy, but the fact that we had Nigerians who were global citizens, so it was easy, right, for us to go to the international community and get things done. So now we just see fines, nobody's even replying. There was a tariff the other time, so nobody said anything. So this one, so most likely it was just sort of like nobody will have any concern with anybody, and that's how it just goes. So we really lost that touch, and I hope that we have people get in those positions that will begin to now deliberately
look towards at least to make it something loud.
Even if you can't change the law, at least have a conversation about
it. Okay, thank you so much, Daniel, for joining today's conversation. Now, before we go, let's look at today's business word, which is private equity. Private equity is money invested in a company by investors who buy ownership or equity, you can call it that, in that business, usually to help it grow, expand, or become more valuable over time. Unlike buying shares on the Nigerian exchange, private equity investments are typically made directly into private companies or through special investment deals that are not available to the general public. For example, the Dangote petroleum refinery recently raised about $2.5 billion through a private equity placement, meaning that investors injected fresh capital into the company in exchange for an ownership stake, betting that the business will become even more valuable in the future. So simply put, private equity is investors putting money into a business today because they believe it will be worth much more tomorrow. And that's all we have for you on today's Business Lens. See you on the next episode and have a business-minded week. My name is Divine Alex. Bye for now.